Fed is proposing something called the enhanced supplementary leverage ratio. And there are those that contend that the ESLR proposal would lower capital levels at your banks by $121 billion. 3 questions. Is that figure accurate? Does it take into account capital at the holding company level? And if so, how much capital would actually leave the organization if the proposed modification to the ESLR is made? Who would like to take that one? Anybody? Nobody?
I'm fine to start. The figure is not accurate because there are other capital restrictions under which we would operate. We estimate that it would probably reduce the capital we would have to hold by less than 5%.
Okay. Mr. Corbett, you were indicating you want to say something?
In the case of Citi, it's not accurate. I think by the Federal Reserve's own calculation, there's 23 or 24 different types of capital being calculated, and the enhanced supplemental leverage ratio for our institution is not the binding constraint. Stress testing or CCAR capital is, so that leverage can move wherever it may move, and it's not going to be a reduction to our capital.
Mr. Solomon, I think you want to say something?
No, I was going to repeat what you said. It doesn't take into account holding company capital. And
right.
for Goldman Sachs, it doesn't reduce our binding constraint for capital.
Okay, perfect. Thank you. Mr. Dimon, as you know, I've been raising alarms with regards to CECL. I believe it can have a really detrimental effect on our economy. I've heard from many industries and from banks in particular, insurance companies, credit card companies, the housing industry, that it will suffer because of an ill-advised accounting standard that it is. Do you have any concerns about CECL, and how would you believe it would affect the economy as a whole, in particular financial institutions?
So CECL is where a bank puts up loan loss reserves for the full life of the loan up front. And for JPMorgan, I don't have concerns. We've announced the number would be something like $6 or $8 billion, depending what environment we're in. I do think you should all be looking at what it's going to do to smaller banks. I think it will put smaller banks in a position that when a crisis hits, they will virtually have to stop lending because putting up those reserves will be too much at precisely the wrong time. So I do think this becomes an issue for you all to reconsider.
One of the concerns I have is I don't think that FASB has actually looked at and studied the effects of this and the cyclicality of this, such that they didn't look at mark-to-market and look what happened there when we had a downturn. It exacerbated the situation. I think the same thing could happen with CECL. Do you agree with that?
I think CECL will constrain banks at precisely the wrong time, yes.
Okay. Do you see an effect on the GSEs, on Freddie and Fannie?
I have not.
They're going to have to reserve
It's
just
a
like...
very good question. I've just not studied it.
Okay, very good. Anybody else have an opinion on the effect on Freddie and Fannie? Mr. Moynihan? No? Okay.
Not on Freddie and Fannie.
Moving on. I have a lot of financial services companies that are very concerned about the cost of compliance, especially smaller banks. All of you are big enough, you can probably absorb the costs. But the problem was that at some point you had to pass this all on. But the Bank Secrecy Act is something I think a couple of you mentioned in your testimony that is very difficult to pass on. Can you give me a cost of what it takes to comply with the Bank Secrecy Act with regard to SARs, CTRs? And how many do you send to FinCEN a month? We'll just go down the line here. Mr. Corbett.
For Citi, we've got between 13,000 and 14,000 people that spend full-time working on BSA, KYC, AML, and we spend in excess of $1 billion a year to be compliant.
Our number is a little bit higher than that, and we file something like 200,000 SARs a year to the federal government.
It's a much smaller issue for our company, given the nature of the business, so low hundreds of millions.
Mr. Moynihan?
It's a little hard to isolate because it's a part of everybody's job, but there are hundreds of thousands of SARs filing, and the question that we've raised and we talked to various authorities, is there value in those? And are they actionable, and do they provide value? So the question isn't how much you spend, is whether it's giving the value that it should.
I have to go to FinCEN to get the number there. One last question here. Mr. Corbett, Mr. Dimon, you had an opportunity to bring a big company to your neighborhood there, Amazon. Were either one of you involved in financing that, or potentially financing the relocation headquarters?
I'm sorry, funding?
Yeah, to funding it, the move there?
We were not involved with funding.
Okay. Do you know economically what kind of impact it's going to have on your city to not have that business locate there?
I don't know the specific numbers.
I understand it was 25,000 jobs initially. I'm sure there's more ancillary jobs as well. Is that what you've heard?
That's what I read, correct.
Okay. Thank you very much.